Welcome to Get Rich Education. I'm your host, Keith Weinhold. Just how high is America's national debt and why? We will never pay it off. More trends converge toward favoring single-family rental homes than in crisis times, identifying what is perhaps the most reliable and resilient real estate market in all of America and why, with two great guests today on Get Rich Education. The people that our listeners can't stop talking about are Ridge Lending Group and MLS 42056. They provided you with more loans than anyone. It's where I got my last few loans, and they finance single-family income property up to fourplexes. They're the number one lender for both beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and you'll end up with your custom plan for expanding your cash flowing portfolio. Start at ridgelendinggroup.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to Get Rich Education. I'm your host, Keith Weinhold. What America and much of the world is feeling now is that investors and markets are torn between pessimism on the still grim economic data and optimism on the tentative reopening of a number of economies. Well, as the Fed pumps out dollars like there's no tomorrow to help pave over the problem with layer after layer of dollars, many people then expect long-term inflation. Food prices are already rising, but short-term, CPI prices have risen just 0.3% in the last year. Now, deflation is possible short-term. Look at the prices of items that have fallen. Oil, clothing, car, and airfare prices have all dropped. Well, when prices fall because people stop buying things like they have been for the last few months, then manufacturers sometimes can't charge enough to make the product that they want to sell. Well, when they can't charge enough, they'll stop making those products. That also means that they lay off workers, and then that can start a cycle where demand continues to fall as more people lose their jobs. Well, then consumers further postpone purchases when they think that the price will be lower later. This happened around 2009 as well during the Great Recession. That was a short bout of mild deflation until when we soon went back to normal inflationary times. Now, when deflation is mild enough, well, no one really notices and people don't postpone purchases. And Americans in particular, as soon as they can, again, they do have this propensity to borrow and spend and consume. Oh yeah, we're great spenders. Now, America printed a lot of dollars, the euphemistic name for this being quantitative easing, of course. They printed substantially to help see us through the Great Recession 12 years ago, but that's almost nothing compared to what they're doing today. Let's talk about the torrid pace of printing today. Now, you'll remember that economist Jim Rickards was here with us, about 9 months ago. That was episode 253. He gave us a great history of debt in America. Remember that he told you that Alexander Hamilton created the debt 230 years ago. Rickards told us exactly how much debt is too much debt, and we talked about solutions to the debt then. Well, to expand our national debt by $1 trillion per year is substantial. Well, yeah, we've exceeded that. To expand our debt by $1 trillion a month, now that feels unsustainably suicidal. Well, our current national debt is at about $26 trillion. And do you know at what rate they're inflating this debt by? Lately, pandemic stimulus programs are growing the debt by close to $1 trillion per week for just a short stretch here. You heard that right, per week, to get us to $26 trillion now. To put this into perspective, do you have any idea now how much each American taxpayer owes? That is, if you take the $26 trillion debt and divide it by each American taxpayer, any idea what that figure is? This is going to give you some idea on if America can ever repay its debt. The national debt is over $100,000 per taxpayer, and it recently crested over $200,000 per taxpayer. Yeah, our national debt is now $205,000 per taxpayer. Of course, you can always watch those figures roll higher in real time at usdebtclock.org. Well, if you thought that there was ever any chance that America could repay its debt in full, which seemed kind of doubtful before, well, it is almost in an impossible range now. And therefore, it seems that much more likely that America will inflate the debt away. It's the politically expedient way to just get rid of it. If over a long period of time, you give today's dollar the purchasing power of a dime later through inflation, then, for example, today's $26 trillion debt would really be revalued to just $2.6 trillion in debt if you dilute the dollar enough. That's just an oversimplified example of how inflation helps America pay back its debt. Well, if you think that that's what they're going to do, and that's just one reason why the 100-year trend line of the dollar is inflation, well, then it's a great time to be that real estate investor with that long-term fixed interest rate debt. Yes, you win that inflation triple crown, as inflation will simultaneously inflate your asset value, deflate your mortgage debt, and finally increase your cash flow at a rate faster than inflation because you're leveraging off of your principal and interest payment amount, which remains fixed for 360 months. Yes, that's 30 years. In times of uncertainty, if you identify both the resilient real estate market, well, residential rental property is also that recession-resilient asset, then you might think of these investment properties as a safe haven asset, because not only has the utility of homes actually increased in the pandemic as people do more activities from home, but you're paid in up to 5 ways, and you get that 80% debt on it, which inflation debases away for you as your tenant simultaneously pays it down for you. As long as there's durability in that income stream, yeah, that could be deemed as a safe haven asset. And when you are paid those up to 5 ways like you are with real estate, it's kind of like you have this ability to play both defense and offense at the same time. You don't have to choose one or the other like you do with a lot of asset classes. Because today, it is increasingly important to identify recession-resilient places. I don't know if there's a more stable, resilient market than the one that we're talking about today. It's a place where, for a substantial metro, price-to-rent ratios could be the very best in the entire nation. Forbes had previously named it as the #1 cap rate market in the United States. That is the #1 income-producing market. Now, within the pandemic, you're getting more desire for Americans to move out of communal apartments and into single-family homes for privacy and because no one wants to be around others and catch a virus. Well, consider this. You don't really hear about too many new business ventures being launched during a recession like this, but this single-family rental trend has so much momentum behind it that just about 10 days ago, JP Morgan Chase and another company called American Homes for Rent, they announced that they're launching a joint venture to build 2,500 single-family rentals across various markets in the Southeast and the West. Mike Kelly, the head of Real Estate Americas at JP Morgan Asset Management, said, and I quote, "We see this shift as particularly prevalent among the millennial generation, the largest U.S. age cohort, who are looking to transition away from apartment living." Kelly continued, "The move toward more spread out living is also expected to accelerate in the wake of the COVID-19 pandemic, and we anticipate strong occupancy and rental growth rates across properties." That's the end of what the JP Morgan rep said. And now that banks have made it harder for owner-occupants to buy and own their own single-family homes, well, they're more likely to have to rent one now. So a lot of positive, longer-term trends there. Let's talk with one of the longest-running, highest-volume, most reputable operators of single-family rental homes right now. I'd like to welcome two guests onto the show today. They are each familiar faces and voices because this is about their sixth time on the show, though we have not had them here recently. First, he's a family guy that was born and has lived most of his life in Memphis, Tennessee, enjoys the outdoors and watching Memphis Grizzlies games. That's NBA basketball for those that don't know. But you know him better as the founder and CEO of Mid-South Homebuyers. Back in 2001, he fell in love with making ugly houses pretty and set out to master the business of passing bargains on to bargain hunters. And over the last 20 years, Mid-South Homebuyers has purchased, renovated, and sold now over 2,600 single-family homes in Memphis to real estate investors across the U.S. and globe. And as a turnkey seller, what they do is they provide you with a completely renovated investment property, built-in property management, and a maintenance team to real estate investors like you who collect residual income while building wealth through real estate. Welcome back to Get Rich Education, Terry Kerr.
Thanks so much, Keith. I appreciate it, man.
Terry, I think the Grizzlies were just in playoff contention when the season ended due to the pandemic. And if it weren't for coronavirus, I'm sure this would have been their year and they would have won it all. This would have been the one.
Absolutely. We were thwarted for sure.
You were robbed. Then she is an avid real estate professional and investor who spent the last 20 years of her life working as a property manager, marketing director, realtor, writer, and public speaker. For the last 11 years, she's been working side by side with Terry Kerr, helping to build Mid-South Homebuyers into one of the most successful turnkey providers in all of America. Welcome back, Elizabeth Nowlin Brody.
Keith, it's so great to be here. Always a pleasure. Thank you.
You've got the married name now, Liz. I think we had you here since that happened. So Liz is no longer on the dating market. In fact, she flew off the market faster than a newly renovated Memphis turnkey home. So
it's true.
And I don't know how long the waiting list was for that one. So Terry and Liz, in uncertain times like we're in now, more investors seek what is safe and stable. They tend to gravitate there more. That's really what Memphis is all about, and some people don't understand why. But first, tell us how you're doing in Memphis through the COVID crisis and some of the adjustments that you've had to make operationally.
Like everyone in all industries, we've been having to jig and jog, but we've been very fortunate as an industry, and we're also very fortunate here in Memphis. We've had to do all kinds of things. All of our office workers are, of course, working from home. We're rehabbing about 100 houses right now at one time, and we have a warehouse full of all the materials that we provide to our contractors and subs, and we're having to do curbside pickup for all the materials that are going into our warehouse. We're having to spray the materials down with bleach when they come off of the 18-wheeler, and we're having to do things from a leasing standpoint, like knock the hole in the side of the wall and put in a drop box, and doing videos for our residents so they can look at the houses virtually. And we're just doing everything that we can, Keith, to keep our residents safe, our subcontractors safe, and our employees safe. And I'm happy to say that it's going very well.
We've had big swift changes on the property management side, but managed to coordinate. I believe we're at a 99% occupancy rate today.
99.1 as of today. It changes every day, but today it's 99.1.
Fantastic.
Yeah. And so I would say in the last 3-4 weeks, we've taken 30 plus deposits from renters and coordinated the same amount of move-ins. We found that demand for rentals is super high. My property manager is telling us that there's a slight reduction in volume of kind of tire kickers and looky-loos and that type of people. So the volume is a little bit lower, but 100% of the people calling are deadly serious, know exactly when they have to move, and are there to do business. So we have seen almost an increase, if anything, as far as that type of thing goes. And it's been equally successful on the rent collection department. Terry, you referred a little bit to the Dropbox. Our renters have always enjoyed ability to pay their rent at any Kroger, any Walgreens, any CVS. It was an additional convenience we were kind of proud of.
Yeah.
But of course, it's the world's upside down right now. So we Terry immediately thought about contactless rent, ways to pay your rent. We'd never let renters pay with credit cards before. It's not the best idea in the first place, but most importantly, you've got a 3% credit card charge that the investors aren't going to want to pay, and you don't want to have the renter paying that. So for right now, we've got it set up so any renter can pay their rent online. They could always do that from an ACH withdrawal, mind you, but they can now pay with a credit card during this kind of upside down time. And we're going to just eat the credit card fees for the renters that choose to do that. So the investors won't have to bear that burden, and our Renters won't have to bear that burden. We're able to do kind of repairs on people's houses as they need to.
We're pared down to emergency service only on the 3,000 or so rental properties that we're managing. But if there's a situation where we've got to get inside and do some work, like suck up some water from a busted water heater or something like that, we're able to work with the residents, get them out of the house for a while to make the repair and to keep the residents safe and to keep the technicians safe. So, yeah, lots of jigging and jogging, but everything's firing on all 4 cylinders, and we're just really grateful. And I know we may talk about it here in a bit, but Memphis is poised a little bit better than some other markets to weather this storm from a property management standpoint as well.
The question becomes, well, how much does a Dropbox and being able to pay your rent online help at the end of the day? And those things kind of pave the road and make it smoother. But we're really just very lucky to be centered in a town where our industries are doing so well during a time that a lot of other industries are struggling. We had great rent collections. We've been blown away and just thankful for the super high, really on point for normal.
Yeah, we've collected 89.1% of the rent so far for this month. And historically, we're going to get up into the mid-90s before it's all over. So we're very fortunate.
Yeah, nationally, some people have been delighted, including me and my own portfolio, in getting greater rent collection than we thought. It's not just the $1,200 stimulus checks. It's also the unemployment compensation that people are getting. And an interesting thing, Terry and Liz, it's something I noticed when I got my own personal Bank of America credit card statement. I realized that my expenses are lower because I can't go anywhere all month. So the tenants are having a lot of the same experience. They probably have a reduction in expenditures. Therefore, it makes it more possible for them to pay the rent. And that's just something that a lot of people hadn't thought about. What you're doing with the credit card fees, waiving those so the tenants can pay the rent, is extremely kind. That way the renter doesn't pay the fee and the investor doesn't pay the fee either. And yeah, the property management response, sometimes that gets changed and prioritized differently. If there's a dent in a wall or a loose cabinet door, well, maybe that's the kind of thing that can wait now while we're in the social distancing area. Something like a leaky drain, that's the sort of thing that can't wait. Any thoughts?
Yeah, it's exactly right. It's emergency service, it's heating, it's air, it's water leaks. If there was a gas leak, electrical issues, anything that would pose a threat to the resident, that's what we're working on. And then we've also let residents know that may have cosmetic issues, or if there is a toilet that's stopped up, but they have 2 toilets, we're not going. But if we know that they're going to be out of the house on a Saturday, and they can let us know that, then we're working in non-emergency repair as it is convenient for our residents. So again, lots of jigging and jogging, but one of the things that we figured out is when we come out of this, we are going to be in better shape than we went into it from a system standpoint and from an efficiency standpoint. So we're trying to look on the bright side there.
Sometimes it can be difficult to tell what is an aberration and what is a trend. But what I'm asking about is the fact that you primarily renovate single-family homes and then sell them to investors rather than communal apartments. Have you had a number of your incoming residents move because they specifically don't want to be in a communal type of apartment environment where apartment dwellers often share the same railings and stairways and laundry rooms and so on, and instead want to come to a single family home? Have you been able to identify that as a trend yet, or is that still too early to tell?
I think it's just an inevitable truth. There's no way that is not a priority. I mean, I've thought of all of my friends and family that are in multi-unit environments right now. And one thing I've loved forever about single-family homes is someone that I come from a multi-unit management background, and I was shocked at some of the huge benefits that come with single-family home management when I transitioned to working for Terry 11 years ago. But I'd never seen such long average tenant stays in the first place. And the difference of owning all your own appliances, owning your lawnmower already, and just you never get annoyed at your neighbors. That already leaked in tenant stays and was an attractor in the first place. And it's more meaningful now than ever. All of my investor friends that do have some multis are worried about their laundry spaces and a few other things, and everyone will get through those challenges well, but we're grateful to be positioned where we are, for sure.
No kidding.
Talk to us historically a little bit, because we do have some precedent for what occurs during a recession in a recession-resilient market like Memphis. I know back in 2009, you had a certain experience with rents and occupancies, and now you can see if that happens again. Of course, no two crises are alike. The global financial crisis from 12 years ago was sort of centered on real estate and housing. This one isn't. It's centered on a pandemic, but of course, there are substantial effects with real estate. So tell us about how your rent and occupancy experience was during the last downturn.
In the last downturn, rents did not drop at all. Memphis, I believe, was poised for a little bit of a rent uptick right when the last downturn hit. And we didn't get the uptick, but we did not have any rent drops. So all of our investors that bought properties did not experience the same things that they had in other markets where the prices of the properties crashed and the rents dropped. Now, during the COVID recession, it's one of the things that we're just very lucky for in Memphis is that we're in a city where distribution and logistics are king, and we're the second largest cargo hub in the world. And so many of our residents draw a paycheck from FedEx, from Amazon, from Nike, and so many of the families that are living in our properties are seeing more income come through the front door from overtime and increases in pay than not. So again, lots of luck, and we will take it.
I think it's just a great time to be in a blue-collar working class market. DHL has a huge presence here. So shipping and distribution is the backbone of Memphis's economy and has been for about 200 years. DHL was hiring 500 people a week for the last 6 weeks, and anybody that could throw a box is getting hired. All of our renters that work for Amazon are getting raises and overtime wages. Every grocery store in town is hiring. Grubhub is hiring. The demand for quality rental properties in safe neighborhoods that rent between $660 and $990 a month is going to continue to stay stable, because what I personally expect from having done really high-end multi-unit rentals in the past is possibly some downward pressure on rents that are in the $2,000 and $1,500 range, where you have some people just looking to maybe shave a few hundred off their rent for those that are affected. And between all of that, it's chugging along. We didn't see occupancy drops in 2009. And so not just rent drops, but no occupancy drops. So everybody that bought from us in 2007 and 2006 saw the cash flows they had expected to realize. Of course, we had a little bit of price drop, but compared to the drops that in value that Las Vegas saw or Orlando saw, Memphis was impacted in around the 5% range. And that was in a housing-driven crisis. We're not seeing any price softening whatsoever in the market right now as far as dilapidated property. There are a few less sellers in the market, but there's a few less buyers in the market. And so what we're finding right now is we are buying the same number of houses a week at about the same prices. It's not that it's the same market as pre-COVID, but the supply and demand is shaking out, even with the overall transaction reduction for the U.S. as a whole. That's what we've been seeing.
Memphis is such a stable place. It's remarkable how little can change there. If you're a new listener, you might not yet realize that Memphis's two big economic drivers really are distribution and medical. We're talking about distribution of goods, not just through plane, with the FedEx hub being there and DHL and other shippers having substantial capacity, but we're talking about a large confluence of train lines. We're talking about substantial barge traffic since Memphis is on the Mississippi River. And you really have these huge warehousing hubs there. And that really plays into your core tenant, which is what I would say is there are 4 R's here, a recession-resilient rent range. Tell us about that rent range that you operate in with your properties there.
We are at our lowest end, we're going to be around $660. For the most of them, we're going to top around $990. We have an occasional, maybe $1,020 type rent, but it's super accessible. Our typical neighborhood is going to be a blue-collar working class neighborhood where the lawns are mowed, kids are riding their bikes down the street, the birds are chirping, there's a lot of pride of ownership visible in the house. We've scooped up the one kind of uglier house on the street and made it the prettiest house on the street and put someone with a job in it. Keith, I think I've told you before, hugs from neighbors are one of my favorite parts about this job, and some of the neat neighborhood revitalization that we need to do. It's some of the cheapest housing in the country. Memphis has always been slow and steady on the appreciation rate. If that ever changes, it's going to be because you can have such a high quality of life here so very affordably. I love Memphis. I choose to live here. I chose to move here 11 years ago, and we're the 22nd biggest city in the US. Every major concert is going to come here. We have incredible theaters, 5-star restaurants, and you can live here safely in a nice house for under $1,000 a month. People move here because of it. I have people move here. I have friends moving here from Denver, from Portland, from Austin, Texas, because they want to live in a cool, fun city, and they're tired of spending $2,500 a month to have a roommate. And so it's just one of the best things Memphis offers. I hope we never go off the charts too much, because I like being a cash flow town, but it's definitely a perk.
That is one trend. People are increasingly migrating to low-cost, low-tax portions of the nation. You're listening to Get Rich Education. We're going to come back and talk about the new market beyond Memphis that our guests have expanded into. More when we come back. I'm your host, Keith Weinhold. Property investors can get killed with maintenance costs. That's less likely when you buy brand new construction. Let me tell you about JWB Real Estate Capital in bustling Jacksonville, Florida. They pioneered the build-to-rent model where you can invest in new construction, turnkey rental property. That's why JWB was featured on the front page of the Wall Street Journal. To learn more and see inventory, start now at newconstructionturnkey.com. Finally, with Total Control Financial, get checkbook control of your existing 401k and IRA funds to invest in real estate. Yes, you can move your retirement money into your own checking account, but you must avoid the little-known tax that you'll get hammered with in a self-directed IRA. Instead, start your QRP. Learn more and get your free copy of the QRP book by text messaging QRP in all capital letters to 72,000.
This is Paradigm Life's Patrick Donahoe. Listen to Get Rich Education with Keith Weinhold, and don't quit your daydream.
Welcome back to Get Rich Education. We're talking with Terry Kerr and Liz Nallen Brody of Mid-South Homebuyers based in Memphis, Tennessee. But interestingly, you do have this great confluence of transportation lines that all converge there in Memphis. And I know if you take a 2-hour drive west on Interstate 40, that brings you to the new market that you guys expanded into. Tell us about that.
Yes, we are officially in Little Rock. We jumped into Little Rock about 8 months ago. We've been preparing for Little Rock for a few years. We've been asked for quite a few years by our investor friends if we would consider going to another market because they're buying from folks in other markets, and could we please go there? And we wanted to build our systems. We wanted to make sure that we had employees trained and ready to pounce on Little Rock. So when we entered the market, we had about 20 of our employees and subcontractors relocate and move their families to Little Rock. So we jumped in with both feet. We visit Little Rock every week and, like I said, move some of our managers there, move some of our regular W-2 employees there, and a whole bunch of our subcontractors, and are just continuing to do the regular old Mid-South thing just a couple hours down the road.
Yeah, it's been so smooth and successful, Keith. We're a very careful company in general, and we're just very conscious and grateful that we're built on repeat investors that are happy coming back over and over again and referring their family and friends. And Little Rock had kind of been on our horizons for a long time, but we couldn't have gone to a market that didn't match Memphis because everyone would just continue to gravitate towards the Memphis properties. And
Right.
we were so pleased to find a new market where we could keep our perfectionist standards. Terry gets in a van and goes to Little Rock every Tuesday. Him and our other heads of renovation are walking every new house we buy out there. When we first got it, they're walking every single house at the completion of the rehab, just like our Memphis properties. The new folks are here in Memphis. We've got the real seasoned, experienced people that know our culture, that know our standards, and we shipped them on out there permanently. It's been really successful. And even though the economic drivers in Little Rock are different than Memphis, it's been well. We have a smaller presence in Little Rock, 60, 70 houses of our management portfolio are there. But for those that don't know, Walmart was founded in Arkansas and it is headquartered out of there. Walmarts in Arkansas always are grocery markets, grocery stores. We have super Walmarts, and 42% of our renters in Little Rock work in the kind of big box retail stores that are still open right now. Right after that is folks working for Verizon, which is a really big employer out there, and they're all managing to work remotely. Our rent collections and our occupancies have been just as strong in Little Rock.
Yep.
And then we have 11% of our renters out there are government employees, and some of them are furloughed, but they're getting paid. It's just been chugging along. We've got a box truck that does weekly runs from our giant warehouse in Memphis to our smaller warehouse in Little Rock. And it is so organically become part of what we offer. I forget to say, and Little Rock sometimes when I'm speaking, because they feel just like our Memphis houses.
Yeah. You're doing so many things right in Memphis that it's like some people were begging you to be the people that expanded into Little Rock. So I'm so glad that you did it last year. And yeah, for those that don't know, Little Rock is the state capital and largest city of Arkansas. So there is some core of state government jobs there. And interestingly, out in Little Rock, you have a family connection there.
Yes, I do. My cousin is our acquisitions manager out there, and he is homegrown Little Rockian, and he is boots on the ground, and he came here and trained in Memphis and is now in Little Rock and is heading up our acquisitions department and looks at about 20 houses for every house that we buy. So he's out there just estimating labor, material, doing rent comps, and doing the whole deal.
He's an agent and a broker with his own 60-house portfolio. So he was well deep into the field before we even connected officially.
Little Rockian sounds like a miniature boxer or something. I don't know that I've heard that before. And you effectively have the same business model that you're duplicating out there in Little Rock that you've had success with in Memphis for all these years, where you acquire a distressed home, renovate it to a certain standard, tenant it for the investor, and then hold it under management if that investor so chooses during the duration of their buy and hold period.
Yep, that's right. And the only difference is that Memphis is kind of the hub from a material standpoint. So like Liz had mentioned, we've got a tractor trailer that comes here once a week and loads up all of the rehab materials. We rehab our houses in stages. So depending upon what stage the property's in, depends on what materials get spit out by the computer, and our folks pull them overnight, load them up the next morning, and ship them on over there. And then they're staged in our Little Rock warehouse that also has a property management office up front. And that's where our Little Rock contractors and MEP techs run and gun from.
You're very centered on systems and rehab and labor uniformity there. Of course, I've been inside your control room there in Memphis and got to see all the automation and all the efficiencies that you have there. Tell us about the price points for these single-family homes that you offer in both Memphis and now Little Rock, and just physically the characteristics of the home, comparing and contrasting them in the two markets.
I need all of your listeners, Keith, in California and New York to make sure they're sitting down, wearing seatbelts if they're driving. But no, I kid. That's where most of
I know where you're going.
But our typical price range for Memphis is going to be about $60,000 to about $95,000. And that's going to be for a completely renovated property with massive bumper-to-bumper 1-year warranty. One thing that's really unique about Mid-South is that our business model is that every house has all new major components every time. So with these price points, understand it's always talking about a brand new 30-year shingle roof, brand new central heating and air from the line set to the A-coil, brand new water heater, Bradford White, 40-gallon, let alone the quality of the doorknob handles and the ceiling fan and all of that. The median home price for the greater Memphis area is about $120,000. So again, everyone to keep in mind how low our cost of living is. We're sliding just under that owner-occupant level where there's quality neighborhoods, you can attract a quality renter, but the property taxes are low and the cash flow is high. Our goal as a company is to provide the highest monthly cash flow to the purchasing investor, and that they're financeable. So you're getting in for 20% down. So that's going to be a down payment of $14,000 to $19,000. Little Rock runs just a touch pricier with just a touch cheaper property taxes. And so the ROIs are super consistent with Memphis. Little Rock runs maybe $70,000 to $110,000, $115,000 compared to Memphis's $60,000 to $90,000. 80% of our investors are financing those, and you can really get a great house and almost like buying an income stream, and it's close to what a good used car costs.
That's right. All those people in coastal California and metro New York City are like $80K for a purchase price. Like that doesn't even make my 20% down payment here where I live. But you really can get a good quality property in a neighborhood where there's pride of ownership. In fact, I've been inside a number of those homes with both of you.
Absolutely.
Are there any last things you'd like to bring up between the COVID crisis and what's happening in Memphis or your expansion to Little Rock? Maybe something that I didn't think about asking you?
Sure, Keith. One question I've gotten from some investors, it's very understandable, is if we're expecting to see, or if we've seen so far, any softening of prices. You know, we all have a little PTSD, I guess, from 2009. I've been reading and studying about it a lot, and I was very surprised to learn that housing prices had appreciated in 3 of the last 5 recessions. I cut my teeth in '09 a lot too, and so we all have that wiring. But what we're seeing boots on the ground here is actually on the owner-occupant level, which is not where we are, increased demand and an increased seller's market due to restricted inventory. On our side, as we were mentioning, pricing is staying super, super stable. We work from the same razor-thin profit margins pretty much regardless. So if we start to get discounts, those will be passed on to our investors. But it looks like demand staying very stable.
So far, we've not seen any drop in rents, and we haven't seen any drop in what these distressed properties are coming on the market for. So far, everything is holding nice and steady.
You guys have done a great job for such a long time at serving both the beginning investor and the veteran investor alike. In fact, whenever a beginner comes to me and says that they want to start with their first turnkey property, you're the first place I refer people to because you are so good with beginners and you also have those attractively low price points. So it's very approachable. Terry and Liz, if someone want to learn more about your inventory and what you do there, what's the best way for them to get started?
Our website is my baby. I have put everything under the sun under there that I ever think could help investors. Terry and I wrote every word on there. All typos are our own. So if folks want to check out midsouthhomebuyers.com, we've got due diligence reports to help you shop in any market, even if you're still exploring other markets. One thing we do that's really unique is that I keep 100% of my inventory that I'm offering to investors at the top of our wait list on there. And maybe, I don't know, I like to shop. So anyone that is just curious, if you go to our available properties section, that's going to load with 60 properties that are under contract to investors at the top of our wait list today. Because we renovate every home to an identical standard and have set price to rent ratios, it's a perfect preview of the type of properties I'd have for folks if they were interested. I actually just added someone to the wait list this morning that has about 300 units. So I've got everybody from folks that are renting and this is their first purchase to really seasoned folks coming to us. And I love to chat real estate. And I always want to say, if somebody is, for example, say you're renting in New York or California and you've never bought a house before even to live in, there's just no such thing as a question you shouldn't ask. And I'm here to talk with people. I understand even having Butterfly is about investing out of state, and we believe it's a trust relationship. We look at every home we buy as the beginning of a new 20-year partnership with a new investor out there. And yeah, so that's where people can find us.
Even your website's homegrown. You contribute to it yourself. No overseas virtual assistant there. And that just makes so much sense because that's really emblematic of the care that you give to investors. So you can start again at midsouthhomebuyers.com. Terry and Liz, thanks so much for coming back onto the show.
Thank you, Keith.
Thank you, Keith.
Thanks for having us.
Yeah, great stuff from Terry Kerr and Liz Nallen Brody. As always, more than anyone else in the history of the show here, they're kind of like the voice of your property because hundreds of Get Rich Education listeners have bought with them over the years. When you think about Memphis, Tennessee, consider that you're really investing in not only what is emblematic of the United States cash flow market, geographically, it's almost in a place where the Midwest meets the South. But really consider something else with Memphis. It's just a great quintessential piece of Americana. It was founded by Andrew Jackson. Mark Twain had an intimate connection with Memphis, authoring the tales of Tom Sawyer and Huckleberry Finn. Elvis and Graceland is there. Memphis is known as the home of the blues and the birthplace of rock and roll. Beale Street, my gosh, this place is really just steeped in American lore. Billboard magazine will tell you that Memphis is mentioned in more songs than any other city in the world. It is a remarkably key piece of Americana when you think about it. And, well, if you're standing on your roof and waving the American flag by now, well, come down from there and change out of that Memphis Grizzlies tank top jersey thing. That Americana stuff, okay, that might make you feel good, but it's really about you getting grounded in the economic resilience here. That's what matters most to you, the likely out-of-area investor. FedEx was founded in Memphis in 1971, helping make Memphis the nation's #1 busiest cargo airport that it is today. A lot more comes together there. Interstate 55, Interstate 40. We mentioned the Mississippi River and the barge traffic. It's got the nation's 3rd greatest confluence of railroad lines. Well, all those big pieces of infrastructure not only support the economy, but those workers then stay located there where that infrastructure is physically located. We first had Mid-South homebuyers here on the show way back in episode number 9. Yes. In close to 20 years now, they have renovated over 3 million square feet of real estate in Memphis, Tennessee, and of course, newly expanding their footprint in Little Rock, Arkansas now. I will tell you that because of their popularity, they do have a wait list. And you know what's interesting? When you have a wait list, like they have for a while, it's tempting for a provider to either raise their prices or lower their rehab standards or dip into a tough neighborhood, but they don't do that. That's why they're a leader and why after 2 decades, they're both doing a lot of business and they're expanding. What they do is they make the experience turnkey for an investor like you. That is, they renovate the property, place a tenant, and then manage it for you. So just to break that down, they perform a full renovation on the property, and my wife and I have stood inside their Memphis warehouse and several of their properties. Then they both screen and place a tenant inside the property, and that is, they process all renter applications and their tri-merge credit checks. They do a criminal background check and other extensive background research, and they do that at their expense, and other companies can have a $40 or more application fee check. So they place the screened tenant for you, and then, if you prefer, they keep it under management for you long-term so that you don't have to be a landlord. Among their buyers, most do get a mortgage, 80% of them finance. Like they said, with your down payment and closing costs, it takes you $14,000 to $19,000 to start in Memphis, and that's about as low as you're going to find anywhere nationwide with a reputable provider in a resilient market, and it'll be a little higher for their Little Rock properties. As you know, paying all cash for a property is often not the best long-term strategy since you miss out on the leverage and any of that erstwhile inflation profiting. But all cash could be slightly more sensible here since purchase prices are lower. Some lenders don't want to do the lower loan amounts, although many will. And if you don't qualify for an income property loan today, since requirements have become more stringent, then maybe, just maybe, as a last resort, you buy some of their properties all cash now and then refinance when qualification standards ease, if you think that's going to happen in the next couple years or whatever. Over the years, I think it's really the informal testimonials that our listeners send to me that say more than anything, like Gary from Temple, Texas, that was just beaming about how Mid-South homebuyers paid to replace an air conditioner on a property that he bought from them and had owned for very close to a year before there were some extenuating circumstances with the air conditioning unit under which Mid-South paid to replace for him. I get so many of those positive remarks about this provider. To get started, you know you can do that through our popular GRE turnkey site or just go directly there to midsouthhomebuyers.com. I'm Keith Weinhold, and I'll be back next week to help you build your wealth. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.